love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again! Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, guys, good morning. Welcome back to another live stream. This week at A1, we are working from home, and I am, for the first time, I guess, ever on the stream, doing some content from home in the new office. Maybe we can switch over for a second, Chandler James, just to show the setup here a little bit. Got the home office underway, got the window here, and oh, there's a scratch post for my cat right there. And then something else has got to go here, but currently there's a little world map here, and yeah, we got the my wife and I just recently, I mentioned this on stream a couple weeks ago, we closed on a house, and we have just been busy with unpacking and building out rooms, and whew, it is a lot, but wanted to make it on stream here and show you guys just a little bit of the office. It's you know, off of a wing in the house, which is nice. So a little private space here to do my recording and to do live streams and everything. So happy Monday to everybody. Hope you're doing well. Yeah, no, it's part of the reason. Thank you very much for the beautiful comments about the office. It's a nice office. Part of the reason when I was looking at this house, what sold me on it was like, I could vision this room being great for content. It's one thing for what I've found in my limited knowledge of lighting and videography and stuff is a darker room is actually kind of easier to work with than a really bright room. Now, I say that as my lighting is pretty bad right now because I need to get some new lighting stuff here, but a dark room, I think it fits the vibe of the channel. I think it's very, very me. I don't know. I like the kind of blue-green walls, and yeah, we'll listen, I'll make sure to have a more proper office tour, like home office setup when I have it, but it's still very bare bones. I'm operating off of a fold out table right now. So it's not ready for full viewing, but at least for today, you got the background. So hope everybody is doing well. Happy Monday to you. Kind of an interesting week. On one hand, you've got things winding down because the holidays are coming. You know, there's not too much more here to this year in terms of events. However, this week we kind of go out with a bang because we've got the Fed meeting, and the Fed meeting, which is happening on Wednesday, we will be live streaming during that event. The Fed meeting is likely to be a market head turner, if you will. Stock market's been up all year long with very few pullbacks. You had, you know, some pullback in August, September. I'm really curious to see if the Fed meeting either kind of perpetuates the win streak, if we just kind of end out on a high note. I wouldn't be surprised. By the way, I don't know if you guys know this. This has been the best. If we were to close right now, I believe that this is the best stock market year of the century. It's been a massive year for stocks. In fact, 2023 was also a massive year for stocks. The last 2-year period is definitely like the best return that stock passive investors could have gotten. And I say that here because, you know, there's this stigma in the air right now that and I know I'm going to try not to go off on my bear rants these days. I'm not, it sounds like I'm really bearish and pessimistic on the market, but I do want to just continue to issue caution. The stock market has been up and away for 2 years straight. Crypto's now buzzing to the upside as well. So I just point that out just to issue some caution. These things don't move up in a straight line forever. They do have pullbacks. And if they, are going to give us pullbacks, then those are interesting setups for me. I am bullish on this market, but I've got to wait for proper setups. And I keep saying that over and over, both as a reminder to listeners, but also just a reminder to myself. It's really easy to get caught up in kind of chasing the FOMO here. And I really think that we'll look back with some time and say, that would have been a mistake to just kind of FOMO into things. That being said, you can't argue with what's happening, right? You can't argue with price. Google is up 1.46% in the pre-market. Broadcom, which was the driver on Friday, last week, is up in the pre-market another 3%. Just 3 minutes to go before U.S. stock market opens up, by the way. S&P 500's up 0.3. NASDAQ's up almost 0.6. I mean, this thing just does not want to quit. So fighting price action is not advisable, in my opinion here. In my view, you can't fight this uptrend, but you also, in my opinion, can't chase it either. I think chasing it is a real dangerous recipe for disaster. When you do get these normal pullbacks, they can be really quick. So, if you get one of what we got in July and August, if that happens again, you're looking at a market that feels indestructible until it starts to really quickly pull back. Those pullbacks happen and they happen real fast. And, with markets kind of feeling, in my view, a little frothy here, a little expensive here, I think we're due for a pullback. So again, not something I'm shorting, but definitely also not something that I'm chasing into this at this time. So, same thing with the S&P 500. One thing that concerns me a little bit about the market itself right now, here's RSP. This is the equal weighted ETF for the S&P 500. And what this chart is showing you is that the actual participation in the stock market right now from the average stock is not very good. What this does is it takes the S&P 500 and it says give equal weighting to every single stock in there, right? So if you have Delta in there and Costco in there and AMD and a little bit of everything, it just applies equal weighting to everything. And the chart's going down here recently. What that's telling you is that participation for the average stock is not nearly as good as the participation of just the weighted index, right? So when we look at Google, Microsoft, Apple, Amazon, those companies, the Mag 7, if you will, they're killing it. Really the top 10 with Broadcom in there now. With that, the index looks really good. But with the equal weighted stuff, equal weighted NAS probably looks okay. This is QQQE. Still not nearly as bullish. So my point is, breadth right now in the market is not super impressive. So it makes me a little bit cautious. I like to see, when the market is rallying, that the average stock is participating, not just a couple stocks that look really good. So yeah, something to think about. On the gold front, you guys might know that I took a trade on GDX. I sold puts on GDX, which is the gold miners ETF. Sold puts down around, I can't remember if it was 35 or 34. But basically, I would benefit if gold prices most likely just move sideways, higher, slightly lower. When you sell a put, essentially you're selling a bearish bet to someone else who wants to bet that the market's going to drop hard on gold. I don't really see a huge drop in gold. You still have geopolitical uncertainties with Donald Trump taking office. In some ways, he might be really good for the geopolitical scenario if him and Putin can come to some sort of conclusion. But at the same time, he also represents some risks with China. He's real hard on China, maybe softer on Russia. That dynamic is still, I still think there's a place to have some gold in the portfolio in my personal view. It's why I took a position on GDX, sold puts on GDX. I'll pull that trade up. Actually, let's give it some time. The options market just opened up, so I'll look at that in a moment. Right out the gate, let's take a look at NAS. And again, NAS is pumping here. Here's the 5-minute chart, 21,900 on NAS 100. My goodness, look at that thing, just keeps going. And again, some of the big winners today, you've got like Microsoft up. Well, Microsoft's up a little bit here. I think it was like Broadcom was up again. Apple's not it. Google has got to be it. We saw Google earlier. Yeah, look at Google up another 3% here on the day. My goodness. Then you have Broadcom, AVGO taking the lead here, pumping up another 4% today. I mean, you've just got everything rallying. And again, this has been the theme of this year has just been nonstop upside move. Also, I don't know if you guys saw this, Bitcoin up to 106,000 over the weekend, pulling back here a little bit, but I like Bitcoin a lot into the new year. If you get a bigger pullback, I'm very much interested in potentially playing that. So we'll see. Anyways, let's take a look at the Edge Finder, see what we got. Still bullish on NASDAQ. Again, that's been a great call. I wish I was in the trade right now. I was in the trade, made some money on it, but got out a little too early, it seems. Still watching NAS for pullbacks. If we take a look at the other side of things in terms of more bearish setups, we've got bonds being a bearish read and dollars are. So kind of a light watch list here this week. Nikkei's bullish, NASDAQ bullish, copper bullish. And let's see also what we got on the put call ratio as well. So put call ratio has been really low recently, showing again a lot of investor optimism. Look how consistently low the put call ratio has been, showing you again that market participants feel really optimistic about the stock market right now. Take a look at retail sentiment as well. This is another popular indicator. I like to look at the currency pairs on this one. So we've got Kiwi dollar, Aussie dollar, Euro dollar getting bearish readings off of the basis that, again, most traders are actually long these things. We get this sentiment data from a couple of brokerages and we aggregate it into our software. Dollar CAD getting a bullish contrarian reading because it seems everybody is short. And you'll see this when we go through it. You'll be like, wow, this is pretty one-sided. So we take a look at Euro dollar and Aussie dollar as an example. If we take a look at Euro dollar first, right? Euro dollar plummeting here over the last few months, going from 1.12 down to 1.05, 1.04. I mean, this is a serious drop in the euro dollar. Meanwhile, what do we just say? Well, we saw Euro USD as it trends lower and lower and lower. Retail is really long euro dollar, right? We can see that because, again, 60% here leaning on the bullish side or currently in long positions on the euro, according to the data that we have. That's pretty interesting, right? So you've got a pretty one-sided crowd sentiment. Everybody seems to be getting long the euro over and over and over as this thing continues to trend down. To me, that continues to be a bit of a bearish sentiment signal. And as we saw here, getting a contrarian bearish reading. The Australian dollar, also same story. Let's go take a look at the Aussie and the Kiwi against the US dollar here for a moment. Yeah, I mean, look at this chart. That is a chart that, again, a lot of traders are out there. They're thinking, look, it hits support. You know, it's gone down too much. It's got to bounce here. It's got to reverse. And meanwhile, that idea has cost traders a lot of money. By the way, this tool that I'm using, the Edge Finder, is our primary market trading software. We had more traders pick up the Edge Finder this year than the last few years, which is really exciting to us as a team. We build tools every single day. That is what we specialize in here at A1 Trading, the company behind these live streams, my channel, everything. A1 Trading builds tools for traders and sentiment tools, economic data tools, algorithmic scanning software that basically helps you find trade ideas in the market. If you don't have a copy, I got something exciting for you today. We're doing trials this month that are half off. So we do 30-day access trials where you can pay to try out the software, but currently they are half off to try the tool. It is really low cost right now. If you're somebody who has some time during the holidays, if you plan on, taking it easy, or maybe you want to get your trading ready for 2025 and do some back testing, get some more data into your trading systems, I would encourage you to take advantage of this offer that we're doing temporarily. Here's how you can get access to our the Edge Finder for 30 days for a very, very low cost. We're doing this just during the holiday break. Take advantage of this by clicking this link, apply for a Edge Finder trial. Someone from our support team will either reach out to you, and you'll also immediately get some information sent to your email if you'd like to try the tools that we're offering. Again, this is what we specialize in day out. We help traders get more data in front of them to make better informed decisions. If you're out there just staring at charts all day long and it's not working for you, consider checking out some of our data, which has helped a lot of traders add more context and insights to their trading. I use it literally every day. Yes, obviously I have something to sell here, but I genuinely, use the tools that we build all the time. They're incredibly useful and add a lot more context to my ideas in the market. So take advantage, 30-day access, half off for a limited time. Okay, so let's take a look at gold. I like this push in gold here. I want to pull up my my position on GDX because I did take one. So panoramic newsletter, interesting. So let's do this. I'm just going to pull up my GDX position. I also have an XLU position, has not really moved just yet. Let's take a look at GDX. So GDX, I took a position and let's see, currently about flat. Actually interesting, GDX is slightly lower this morning, even though gold prices are slightly higher this morning. We'll see where that settles out here today. But I sold a put on GDX. What that means is, again, that I am selling the bet to someone else. It's kind of like playing the casino in markets when you sell options. That's something that I do and have incorporated into my trading quite a bit. I sold some puts on GDX, basically selling someone else a bearish bet, and I collect a premium. I collected about $800 on this trade. So we'll see how that one plays out. But so far, gold prices bouncing should help GDX, I would imagine. It's interesting that GDX is actually slightly lower on the day, but miners and gold miner companies and gold do not move perfectly together, but they do generally move in the same direction. So we'll see. Anyways, oil prices also were something I dropped in our Telegram channel today. Let me see if I can pull that up. So this was, actually, we did a lot of analysis today. We did some stocks analysis this morning, but I did this write up on oil and the oil analysis here basically just was, look, this chart right now looks super mixed. There's not a clear, decisive direction. Some of the things fundamentally that I'm watching is, on the uncertainty of the Donald Trump tariff ideas and the willingness from the Republican Party to pump oil aggressively. That is a bearish catalyst for oil. But at the same time, I mentioned you have geopolitical risks as well as possibility of reacceleration from China, right? China is a huge consumer of commodities. They ship to the rest of the world. They manufacture for the rest of the world. They're a huge manufacturing economy. And so, when you look at oil prices and copper prices and silver prices, you do want to keep an eye on China. So, couple mixed sentiment things here on that front. By the way, if you'd like to join the Telegram channel, let's drop the link here in the chat and you can come join us for free in there. Okay, so oil prices, what I'd be looking for would be a break one way or the other. To keep it really simple, I just see too much of a mixed sentiment kind of outlook on oil. If you can get a break of structure to the downside, then great. But where we currently are, I lean bearish, but I've got to see this kind of breakout to the downside before getting anything really going on oil prices. Speaking of China, by the way, let's just take a look at Chinese stocks here this morning, down about 1%. I do have a position on this one. This was crazy. Look at how this position for me launched into the stratosphere and came all the way back. What I actually did was I sold a covered call on MCHI, which is a Chinese ETF. And you can see that's actually, even though the stock price has not moved very far from my entry, I'm actually slightly hot, up on this position simply because the call that I sold, which expires in 4 days, basically it's up 97%. So that call is almost certainly going to expire worthless. And because I sold that call, that's a good thing for my position. So, interesting stuff on the Chinese stock market. It's been a weird year for Chinese stocks. You've had a couple pops on Chinese stocks and then drops. I mean, it looked like we were having a massive game-changing breakout up 30+% here in a few weeks, and then came all the way, really retraced a lot of that move here. I do still like the outlook for Chinese stocks in 2025. I think that they want to participate in all the boom that's going on here in the West. So I think that they're going to continue to try and stimulate their economy. Also, check this out. So we look at yields for the US, but I added this to my watch list. Here's Chinese government bond yields. What really concerns me about this chart, is that, again, I mentioned earlier, the Chinese economy is like the manufacturing hub of the world. And with the Chinese economy seemingly in the gutter based on this chart, right? Yields plummeting like this is telling you that the central bank is expected to try and stimulate things more aggressively, that the outlook for Chinese economic output is not good. And this is a bit of a concern for the rest of the market. But I don't necessarily think that clearly the slowdown in China hasn't really completely slowed down the rest of the world. But I do think that it is important that we keep an eye on this, especially for commodity prices. If you're somebody who watches oil, you watch silver, you watch commodities, this is a little alarming, right? This ginormous fall in Chinese economic data, especially when they're, like I said, a massive consumer of commodities. We got to be careful about that. Keep an eye on the Chinese economy. It's really important right now, especially if you watch Chinese stocks or commodities specifically. VIX is actually up slightly today, which I think is interesting. I think that is probably, I know it doesn't look like a big up move, but it's at a 3% move on the VIX. That's pretty much nothing compared to where it can jump very quickly. But we've got a Fed meeting this week, and it's really, really important to see what the Fed has to say for us. If they say basically, look, we're not seeing the progress that we wanted to see in inflation just yet, and they signal that rate cuts next year are kind of on hold, it could spook some of the risk assets of the market. The VIX would definitely jump higher on that, I would argue that. And then you have the S&P 500 would probably pull back. NASDAQ would probably pull back. But again, we don't know what the Fed is going to say. Clearly, this market, which has not seen that many rate cuts this year, doesn't seem to care. It seems to rally anyways, so much so that it makes you wonder, how much does the Fed really bear on this stock market rally? And it does bear heavily on certain things. Like, again, the average stock kind of hurting here recently, but because you've got, those mega cap companies, right? Those giant companies, Google, Apple, just carrying the whole stock market higher, the index itself actually still looks very strong. So really interesting to see where that will go here this week with the Fed meeting. And then finally, really quick, the dollar index. Let's take a quick look at that. Also, like I said earlier, if you didn't join already, make sure to join the free Telegram channel. We'll drop the link here in the chat one last time. We're going to be sharing a ton of market updates going up to the Fed meeting. So if you're not in there, make sure to join. Also, while we're on that subject, just so that if you don't like Telegram or you don't use Telegram, we do share the same content inside of our Discord channel. If you'd like to join the Discord channel, we'll also drop the link to that in the chat here for you, so that if that's your preference, you can join the Discord, or if you want to join the Telegram. But we'll be sharing analysis going into this week for the Fed meeting, which I think is going to be some really key stuff. So apply for our Discord channel or join the Telegram channel. We'll drop both links in the chat here. They should also be in the description. So let's talk dollar, but before we do, let's bring in some backup here to help us with that. We got Ivan FX joining the call here in just a moment. We're going to take a quick break to thank our sponsors, and then Ivan is joining the call just after this. Check it out.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with Ivan. Hey, Ivan, how are you?
Hi, I'm good, and you?
I'm good. It's good to have you back on the show. Dollar index is higher today.
Mm-hmm.
Can't seem to find a low. Question for you: Fed meeting.
Oh,
I was wondering, how important? Obviously, it's very important for the dollar index, but
mhm.
how come there's only been a couple rate cuts this year? Meanwhile, the stock market can't stop going up. Does the market even care about rate cuts?
Um, they care, but they care more that their business is still running higher. They can still make more profits. Into healthcare, um, but they care about CPI, and CPI going higher makes they seemingly make more money.
Yeah, no, that's a really important point is, of course, when you talk stocks and indices, it's not just about economic data, it's also about the individual corporate earnings of these giant players like Apple and Broadcom and Nvidia and all of that. So really good point. But then when we talk currencies, and maybe this is why a lot of people really like trading currency specifically, or gold for that matter, is a little bit more isolated just to the economic data, right? There's not kind of sentiment around a brand new chip dropping or something like that.
Mhm.
So dollar index, where are we going? Is this thing just going to keep pushing higher this year? Are we going to put in a new high for the year off of this recent push?
Are we going to make a new higher high to this year, or are we going to go dollar bullish for the rest of 2025? I think that it's a good chance. I think that if so, what the market is currently pricing, as far as I can see, is that uh, we have U.S. services PMI from S&P coming at 58.5 versus 55. That is really a strong services PMI. That Fed is going to what Fed is going to do for 2025. Are they going to cut only two that the market is currently pricing in, or more or less? That's the question. But dollar is now seeming to be making their own decision already before the FOMC.
Yeah, that's a good point. And I mean, the dollar just ripping into the release. Also, we did just get some U.S. economic data that came out. The manufacturing PMI and services PMI came out. So let's just take a quick look at this. So you had on the manufacturing front some more disappointment here, 48.3 compared to 49.4. So some continued contraction in manufacturing data. They did revise slightly higher the previous ones. That's kind of positive. Well, that is positive, but then this is kind of negative. So we'll call the first one mixed. But then if you take a look at services PMI came in 58.5 compared to 55.7. That is better than expected for the services department, but then revised lower the number previously. So a little bit upbeat, slightly miss here for the services PMI. And let's just compare that really quickly to what we saw out of Europe. If we take a look at French numbers, again, kind of a miss here, a beat here. And then if we see German numbers, we had a miss here and a beat here. So I don't know. We'll see. And then finally, GBP, manufacturing PMI missed on both fronts, but services PMI beat on both fronts. Curious to see. I mean, we can see clearly the dollar's reaction to this 30-minute chart, 1 hour chart here, up on the hour. Market seems to be still favoring U.S. economic data over others at this time.
And that frustrates me. I wanted lower on, if you're going to talk about a small little trade I wanted to do, dollar Swissy. I wanted to come lower before taking off. I think that with a dollar strength, dollar Swissy has potentially the most possible, the most potential to go higher, given what S&P did last week and the current form of the economies. This was like, this is what I'm going to catch on Monday.
Yeah.
And then kaboom.
Yeah, I mean, it's interesting to me too that we have the dollar rallying, but at the same time, you've got gold higher and stocks higher. That's an interesting one to me. I mean, the dollar strength, I wonder at what point it does start to uh, make people a little bit nervous. Here's the 10-year yield. It is creeping higher. I guess it really just comes down to the Fed meeting. I mean, if you get a really hawkish uh, Fed meeting here this week and we start really taking out high, that would be a little pressure on gold and stocks, wouldn't it?
Yeah, okay. It would definitely impact gold more than the stock market. Well, if we go through 2022 and the stock market, and you're like, okay, what happened? It only had 2022. It only had like, well, that much of a dip, was it? That was in 2022. That is 2022 from there. So somewhere around there is about 25%, where we have a hiked interest rate from 0 or so up to 4, 5, 5.5.
5, yeah. No, that's
5.
it's that's a good point. I mean, that's with rate hikes like crazy. So, and again, when we go back to stocks for just a second, it just feels like it doesn't even really impact the market that much because again, where we currently are, if it was really restrictive at where the Fed is currently holding their rates, if it was really restrictive, the stock market wouldn't be, flying through the highs every single day, right? So it makes me wonder, is Powell just going to, kind of is he going to feel the pressure to not let this thing kind of melt back up again and repeat the same issues that we faced in 2022? So I don't know. I feel like the outlook next year for the Fed could be a little bit more hawkish than the market thinks it will be. And that could, put some pressure on things like gold and stocks. But as you mentioned, maybe maybe gold more than stocks. What are your thoughts on gold? You have any bias on gold right now, or is it just too neutral for you?
Okay, you're running away from me here, but I just wanted to answer your question. Why, or what happens to why is stock market still going higher? Well, we had Nvidia dropping 50% in 2022, but ever since has done well at least 90% gain from that low of 2020, end of 2022. And why? Well, why did Nvidia rise again? You said
I'm sorry, what'd you
wasn't
say?
that because they made record high profits
Yep.
and they found a new gold mine, and Nvidia turned out to be the biggest stock out there ever,
Yeah, in fact,
or at least
it even
currently.
I think it's the only stock also that has outperformed Bitcoin over the last like 10 years, which is insane. Uh, no other stock has been able to even come close to Bitcoin's return or whatever. But yeah, I mean, that's the thing, is the stock market can just kind of keep going higher off of some of these super stories. As you mentioned with Nvidia, the other one that just went flying high is Broadcom. I mean, Broadcom is this is a $1 trillion company now. It's another ginormous player in the S&P 500 and the Nasdaq, and again is dragging things higher here today. Nasdaq's outperformance in the last few weeks has been incredible, right? 0.94% up today. S&P's up only 0.39, and yet again, where the Dow Jones is flat to red. I mean, it's a really interesting divergence, and I've been pointing this out too. I like to look at the RSP, the equal weighted ETF. This has actually been, just like the Dow Jones, has actually been moving lower. This is the S&P 500 without putting extra weighting on the biggest companies, and you can see it's actually moving lower here recently. So just kind of an interesting story. I wonder if that is if that's going to be an issue, or if the other companies will start to catch up to the major players, Broadcom, Nvidia, et cetera.
So the conclusion of my answer was the companies are still making money given the higher interest rates, given the higher inflation, given what we're supposed to give them higher financing costs. It's still find a way, at least for Nvidia, to make more money, and that's why the stock market is still higher, even with this what is it, 4.5, 4.75% higher interest rate. But yeah. yeah, that's the only reason. If he didn't make money, we wouldn't have stock market so high.
Yeah, no, I mean, that's exactly right. Is at the end of the day, the Fed, I feel like a story that has been really prevalent in the stock market world has been, as long as the Fed is not talking about hiking rates, as long as the next direction seems to be a rate cut, the market can just kind of ignore the Fed and go back to focusing on strengthening earnings for companies. So it's an interesting market out there. What about oil, Ivan? Does oil any bias here for you? Chart's been really choppy. But going into 2025, I know you and I have both talked about leaning a little bit more on the bearish side.
Mm.
But what do you think about this?
I can't remember what I said as a target, but yeah. Who was it OPEC the other day that lowered their forecast, demand forecast for 2025? I've also seen rumors that we're going to also still continue to cut production into 2025. And we have found seemingly an equilibrium about $70. Also, I would argue, well, we have Syria as well now into the mix, but I would argue, given the CPI story, if that's the story that I'm going to go with, if that is still about 2%, we are okay, but we're not going to have anything crazy, aka 2022, which was the highest inflation we've had in a very long time in the G7 countries. Then I believe 70% is. But if we go if we inflation wise go below 2, generally across the board, China, that supports my bearish case.
Yeah, no, it's that's a good point about CPI. You know, inflation, of course, impacts commodity prices quite a bit. When you have like little to commodities told us that inflation was falling a lot sooner than the CPI did, right? Inflation really ticked higher. If we take a look at like here's earlier in the year, copper went crazy. In 2022, copper went parabolic, right? But then copper prices started to slow. They've been really kind of cooling off, and it's an interesting indicator almost to watch commodities in their relationship to CPI. So we'll have to see where that goes. But again, a oil price, I say this often, but it is really important, is like if you get a significant rise in oil prices, it also kind of increases the probability that CPI is going to come in higher, right? Prices inevitably derive from where oil prices are trading. If you get really expensive, you know, just like we all don't like to pay a bunch of money when we go to the gas station, companies also have to pay those prices to ship goods in order to get them to the consumer. So that can be inflationary, right? Those prices get baked into production and transportation and all sorts of other variables. So definitely worth watching oil prices next year. If they continue to fall, it also continues to help the inflation story, right? That maybe that last leg of inflation for specifically like for the US to get us down to 2%, maybe it does require oil prices to actually break down to the low side, right? Down into the 60s. And with, as you just mentioned, OPEC kind of forecasting weaker demand and a story from China that just, you know, does not look good. I was talking about this just before you joined, Ivan. Check this out. The Chinese 10-year government bond yield, 1.72%. I wish I could get that interest rate.
Wow.
Yeah.
Yeah. Yeah. That's well, that's what happens when you use a lot of stimulus. You crash the 10-year?
Mm-hmm.
Yeah,
10 year.
the 10-year yield. But you mentioned gas prices. I'm just going to mention a couple of things here. Trade war with Canada and Mexico. Isn't that going to hurt your gas prices? Isn't that don't they import oil? Sorry, gas to America? Doesn't they help out keeping those prices low?
Yeah, I mean, I couldn't tell you too much about. Well, I know Canada, of course, is a massive exporter of oil prices, but it's difficult, right? Because you also have Trump and the Republicans wanting to seriously pump a lot more oil. So it's like on one hand you have more supply, on the other hand you have less supply from the trade stuff. I also just, it's so tricky because we also don't know what these tariffs will actually look like, right? We have theories, we have ideas. Oh, maybe we get XYZ tariffs, but we don't know how intense or how legitimate they're going to be until, honestly, not until like middle of next year. It's going to take time for all these, policy changes to potentially take place even. So it's such a toss up for next year. There's so many variables that could change the landscape for commodity prices, change the landscape for inflation. So, I mean, for me right now, it's kind of just trade what's in front of us. And I can't look out 6+ months away. I have to look next 1 to 2 months as a trader that is more focused on the swing trading, the lower time, or not lower time frames, but a couple weeks out. I kind of think when it comes to the tariff stuff and all that, that's, if you're a long-term investor, you might be thinking about that a little bit more. And I do some investing, but for my active trading, I feel like it's just a little too up in the clouds to try and forecast exactly what's going to happen with all that right now. Do you agree, or are you looking at it pretty aggressively?
No, I can see, I hear English, that I want you to at least have a thought about it. In 2022, Canada was the single source of 52% of the gross total petroleum imports to the United States of America. 52 in 2022. And if there's tariffs on Canadian oil, or if they don't want to send to America anymore, well, I don't know. I'm just this oil thing might not go lower anymore when if 50% or even 20% of the market just vanishes thin air one day. But yeah, that's my risk to my lower than expected or lower oil price. Of course, it is down to whatever going to happen, but it's still a risk. I want you to have a thought process about, and everyone to have a thought process about, even though how balloonist it is. At least some thought of, okay, we might actually need to stay dollar long. We might even need to stay yen bearish or gold long or whatever for a bit longer, given the situation that might or is most likely to come, because that's what it did last time. Is that it's going to do it again. That's all. But yeah.
Yeah, I was going to ask you about the yen next. What are your thoughts on the yen? Yen pairs are up and away today. Yeah, euro yen, pound yen, dollar yen. Everything seems to be up. You've been bullish on these. Do you have trades on? Are you looking for setups?
I tried this morning. It's not really great. So dollar yen was like my little. I want to stay away, but I still love it. But I hate it. I didn't get an entry on it because last week my report said that we might hike, or we might know a change in the Bank of Japan meeting on Thursday. Today everything has lined that they're not going to change. Therefore, yen weakness. Therefore, I am late, and therefore I don't have anything.
Fair enough.
But yeah, as you can see, I've tried to make a trade plan, but it didn't catch.
It's been an interesting last couple months too, Ivan. There's just been so many like one directional trends, very few pullbacks and a lot of stuff. And this happens, right? You get these moments where, NASDAQ's there's just little to no pullbacks here, or in what you're talking about, the yen pairs, right? Yen pairs have just been very trendy here recently, right? You had this pretty clean downtrend, then this pretty clean uptrend, then this downtrend, and now an uptrend. But there's very few kind of moves that look like this, right? Where you get these steady pullbacks, and that can be frustrating. How do you deal with those scenarios? Do you just literally just wait for better setups and just can't force anything?
No, I cry.
Right. Me too.
So yeah.
No, it's important. You gotta get your crying in. No, it's relatable. That's me with the NASDAQ right now. It's just ripping higher without me. I miss it.
It's very important to stay focused and stay true to what you want to do. as a fact matter, if you feel like buying now, there is nobody in this world ever going to stop you. But I just have to keep reminding myself that if I do so, I'm going to get hurt.
Yeah.
It hurts. It hurts.
Yeah.
Seeing
No.
the stop losses, seeing the stop losses, seeing the stop losses. So I try not to do it.
Yeah, it's like it's so tempting. That's the thing is when you're staring at it every day and the thing just goes up and up and up. But as you mentioned, it's like the second you try and join into it, not you specifically, but all of us. It feels like it immediately turns around. So I think that the best policy for setups is to wait for them to come to you. Otherwise, don't touch them. I think a lot of traders, if you give in, if the thing is, it might actually even work sometimes. Like let's say I'm looking at dollar yen, and let's just say I buy this thing and it just keeps ripping. The problem is we just built a bad habit, right? We just encouraged ourselves, like we just gave ourselves a good reason to make a bad habit. And the next time we're going to do that, we're going to chase with a huge position size. And then when it does reverse, it's going to hurt us, right? It's almost like if you discipline yourselves, like I'm only going to take the setup if it comes to me. You're setting yourself up for good habits and proper risk management. You're doing all the right things, even if it feels like sometimes you're missing out. Would you agree? Anything to add to that?
Well, I always miss out, so that's why I said to the trader. I don't know. I think, yeah. What I normally tend to say is that if it did give you, satisfaction, it's probably 3 out of 10 trades that does well, and when you misbehave, it does go in your direction. But if you look just over here and say, okay, if you start buying, the peaks and the highs, you have all of that. And I think that's about 100 or 200 pips lower. I don't have that stop loss.
Yeah.
So when you think that, okay, let me, if this is also the same case, if I'm going to start buying here, as I was supposed to find that arrow, if I'm going to buy here, okay, we actually have a large pullback. I might get the same price at a later time, but at least have a pullback. Or for that matter, also here, or even, I'm just imagining if this is the peak and we go down like that, do I have the stop losses to hold from 154 to 149.5? No, I don't have that.
Yep.
So I have to wait.
That's a really great exercise. What you just talked about too, Ivan, is okay. I'll give you an example on the NASDAQ. Like, okay, if I want to take this trade, this is where on this chart, where am I going to put a stop loss? I know where I'm going to put a stop loss. I want to put my stop loss there. Behind this structure, I just know that's where I want to put it. So if I were to take this trade, this is a good question to ask yourselves when you think about FOMOing into a trade is where would I put a stop loss if I had my ideal entry? And this does not look like a good risk reward trade. I mean, yes, of course, if you get some sort of ungodly parabolic move that's never happened before, then it looks okay. But most reasonable moves, you've had this extended move on the NASDAQ. Where do I put a stop loss? Well, I don't really have a proper place to put it without, putting way too much risk on the trade. So again, look at this same trade setup if I were to wait. And now you've got something that looks a lot more favorable, at least to me, to my trading and to everybody. You should do the same exercise with yourself. If you are wondering if you feel like this is FOMO, then ask yourself, where would I put a stop loss ideally? And if the stop loss looks ridiculous, you're probably on the verge of FOMOing into a trade. So that was a good exercise, Ivan. I think that's a great point and good tip for people who are, maybe feeling the FOMO right now. There's so many things to feel FOMO on right now. I mean, if you're not in Bitcoin, look at Bitcoin up to 106,000. I mean, everything is ripping. And I think it's just so easy for people to get caught up in this, chase, right? The chase mentality is really strong. But it will, things will change. They always change. It just may take some time. Pullbacks do come along. And if you make silly mistakes, there's a good chance you'll regret, doing them later. So that's my opinion on this stuff. It's a crazy risk on rally right now, but we've just got to stay patient. And, risk on carries over to yen pairs big time, right? Pound yen up, euro yen up. There's a bit of risk on sentiment coming in where these riskier currencies than the yen, quote unquote, are getting some strength behind them.
100%. Now, the thing is, with anything that you do, everything is risky and not appropriate for everyone. Just to have that mentioned. Infodude had mentioned US 30, which I'm like wondering, why is it bearish short term? Why is it falling? So maybe this one is a better risk reward ratio, at least for me. If it does break the previous high and starts climbing higher again, then maybe that's a better one instead of S&P and Nasdaq.
Yeah,
Just a thought.
I mean, the Dow Jones definitely looks a little bit more reasonable than the Nas right now in terms of price action. Especially, if you go back and test some of these levels, look at the divergence is really fascinating to me. The fact that, Nas is just up and away, powering through another 1% up today. And you got Dow Jones flat to down. But this happens in markets, right? You get divergence, you get winner takes all effect sometimes. And that is your, small number of stocks at the top that are just powering the NASDAQ. The NASDAQ is pretty concentrated in technology stocks, which if we take a look at XLK, which is a technology sector ETF, you can see it's up today. It's been really powering higher here recently. But then if you take a look at, let's take a look at industrials, right? XLI, not so hot. If you take a look at healthcare, this is not hot at all, right? Healthcare stocks have been getting crushed with the whole, concern about what is RFK going to do and all the Trump administration stuff. And people just don't seem to like healthcare stocks right now. Sectors are a fascinating thing. If you're someone who's interested in indices to explore, I highly encourage you to add some of these to your watch list and play around with them. I watch a lot of sectors myself. I trade a lot of sectors. I currently have an XLU position on. It is doing nothing right now, but I like utilities. These are power companies. These are companies that, facilitate the grid, facilitate, electric, water, really simple, basic companies. But I think they have a lot of potential. And so, you can pick and choose a little bit more with sectors rather than just picking up the index. As Ivan mentioned, the NASDAQ may be up, tremendously high, but maybe the Dow Jones is pulling back a little bit more. With sectors, you can go even one step further and take a close look. In fact, we actually even built on the stock box, we built a sector scanner for this exact purpose, because sectors are something I love to trade. If I go top sectors here, check this out. So utilities, part of the reason why I went long them is that their financials look a little healthier than other places in in the software's view. And the macro score is kind of mixed for most stocks right now. But again, sectors can be really interesting to trade. There's utilities, industrials, energy, real estate, healthcare. The cool thing about this is you can actually break down your indices into individual sectors and trade them individually. It's kind of cool. So you have to have a stock brokerage for that. And I know that's not available to everybody, but a lot of brokerages, even international ones like Interactive Brokers, will allow you to trade sectors, things like that. So just something that I look at. I really like to trade sectors, but can be really a nice way to find your niche, if you will.
Mm-hmm. That's interesting.
Have you ever, Ivan, do you have a stock brokerage that you use?
Yeah.
Was that a yes or no?
Just
I
thinking.
couldn't tell.
Yes, I don't. I don't know. Maybe that was a brain fart. Yeah, I do.
Okay, and I don't know those. I know we get those questions all the time. Like for non-US people, like how can I trade ETFs or how can I trade individual stocks? I'm curious. Do you know anything on that topic, or do you really dive into those at all? Or I know you mostly trade currency pairs and you trade indices and stuff like that. But do you? What does it look like for you?
Well, for me, I can trade. Well, I mostly trade indices, but that's what I do on my Norwegian stockbroker. But yeah, that's also Norwegian indices and American. And yeah, but we can trade Tesla and Amazon and whatever from across the pond.
Well, there you go. Also, we'll drop the link here in the chat to the brokerage that I use, which is Webull, for stockbroker stuff. If you want to trade options, I mean, this is what I use all the time to take trades, place trades, etc. And it does offer to non-US countries. There's several countries that it does accept. So check out Webull if that's something you're interested in finding out more. The link is in the chat and in the description down below. Ivan, it's time for us to get kicked off.
All right.
We've come to the close. But before we do that, everybody who's watching, if you guys enjoyed Ivan's commentary, he is a regular contributor to the A1 Trading Show. He also does coaching webinars within our Discord group, and he offers one-on-one coaching. If that's something that you're interested in or you're looking for, Ivan has worked through. We've had a lot of people who have told us that they've really benefited from working with Ivan, both one-on-one and within the group. So if you have not already taken advantage of his coaching calls, you can do so by make sure that you subscribe to Ivan's YouTube channel. Here it is. You can find him on YouTube at IvanFXW. And if you'd like to find out more about his coaching calls, you can send him a DM on Discord if you're in our Discord VIP group. And if you're not, you can find his information on his YouTube channel. Ivan, thank you very much for coming on the show today.
Thank you very much for having me.
All right, we'll see you next time. And again, guys, now we're going to transition the show to our next host. We've got Mr. Chris Pulver taking over for a little bit. Stocks are up higher here today. No surprises there. VIX is up 3% here, a little bit higher ahead of the Fed meeting. You've got gold flat on the day. Most commodities slightly in the red. Bitcoin up 1.5%, 106,000. My goodness. Dollar index chopping around here, but still higher from that 106 level. Got some strength in the dollar front. Again, no surprises there. Currency pairs have been getting beat up and whacked by the dollar for the last few months. Really, really interesting story there. Anyways, guys, show continues with Chris Pulver just after this quick break. Check it out.
'Twas the night before Christmas, and all through the house, not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night. I'm not really sure how he did that. Pulver alerts are now available at a1trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
What's happening, everybody? How we doing? Happy Monday. I am just going to try to flip things around. Give me 1 second. Close. It's not closing at 65. I'll try to 65 real quick. Not filling at 65. Let's try it at 70. Filled at 70. All right. Taking a quick gain on SPX. Let me do a quick update and let's get into the charts. Lots to digest. Soaked up a bunch of content, macro stuff this weekend. I know I had a couple of public service announcements last week in these sessions. I wanted to kind of continue on that without it sounding so negative. But look, I've got a trade in. I'll put it in Pulver alerts. I'll put on a hedge on the QQQ. Closing for profit at 0.70. All right. Also, Bitcoin is up and BITO is up. I took some profit on this one. I was into some $14 calls for $5 each. I closed out for 13 bucks today. So 13 minus the 5, 160% gains on BITO calls. I'm taking the profit now just because we're getting into a spot where, look, I'm as excited about Bitcoin as everybody else. But I'm also a trader. And so it's not a forever trade for me when it's coming to some of the option trades that I'm in. And so when, my BITO looks like this, if anyone's familiar with options and time decay, time is your enemy when it comes to long options. And so this is what a typical options theta decay looks like. Now, my BITO was in enough time that I didn't really have any type of time decay working against me. So because time didn't work against me and price has been appreciating nicely since the election, I get a lot of extra juice to those call options. So my deltas are up, my gammas are up. I'm getting more and more. I mean, I'm trying to think when I close it out, a $14 call on BITO might be trading at like a 90 delta right now. Let me find out. So I go BITO and it was a 14 delta. So 14 delta is a 98 delta. It's a 98 delta. So I'm sorry, $14 strike is a 98 delta. That means that for every dollar this asset goes up, I'm getting 98 cents increase in my option. So that's about as good as it gets. And I realize, like, yeah, this could go higher, but I look at Bitcoin right here near an asymmetry level. And if I'm up, let's say what, $13 minus 5 is up 8 times 2 contracts each. So 16. So I was up roughly $1,600 on 9 accounts. So there's 14.4 in gains. The reason I'm going to take some profit on this is I'm going to take those gains, keep those gains, and I'm going to allocate that into more with IBIT, more with FPTC, more with MicroStrategy as it's getting passed into the NASDAQ. But my outlook on Bitcoin, just in the near term technically, is that we have a symmetry level, and similar to what I see with currencies, crypto responds really nicely to technical waves, to structure, and I think that Bitcoin in this kind of 107 to kind of 110 zone is likely going to create a profit taking zone, or at least have a pullback. So we could also look at overbought conditions. We could look at everything, crazy stuff like mutual funds, ETFs, levered ETFs, single stock levered instruments like your double X MicroStrategy or double X Mag 7 or double X. I mean, I don't even know. There's so many of them. It's like I don't touch the leverage stuff because they're all priced out to not be long-term holds. But it's crazy to think it's like MicroStrategy is up 100+% for the year, and people are like, I want to have 2 times that. And what else? Like, isn't there like an ETF that's like leverage Nvidia, where Nvidia was up 100+% for the year, and it's like it's not good enough. I want to double that. So anyway, people are long, and when I say people, I mean like retail investors. When everyone's come in, post-election, everyone's all excited. We're getting these like big juiced gains. The Fed is likely going to be cutting rates this week on Wednesday. I think it's going to be a bit of a neutral to hawkish cut, just because we do have core PCE this week as well. And it doesn't show a forecast here on the Bloomberg economic calendar, but I want to say that we had CPI print hotter and inflation is warming up. But I saw the numbers this week. The core PCE year over year, which doesn't have a forecast, but we had a previous at 2.8. I read this weekend that we're looking at a Fed projection of 2.89. So this is either like the Atlanta Fed or the Philly Fed or the New York Fed or whatever. But 2.89 is the projected year over year. Again, showing that this is the Fed. And again, I don't think the Fed is this dumb, but the Fed is like, okay, we're going to cut rates down to 4.25%. Okay. So they cut to 4.25 and they look at core PC and they're like, well, PC is at 2.89. We still got lots of room to be, less than restrictive. I don't think they're that stupid, because if they're seeing that inflation is now 3 prints going up, we bottomed out on CPI, we bottomed out on PPI. If we're bottoming out here on PCE and core PCE, and they're trending now with multiple data points trending higher, this is why I think it's going to be more of a neutral to hawkish cut this week. Now, does that top the market? Not necessarily. They might say very little to disrupt the trend. We might see another 58th, 59th, or 60th all-time high going into Christmas and New Year's when the market is just in permanent like holiday drift mode. The Santa rally. Also from Christmas, like that week of Christmas into New Year's, that's considered the 2-week Santa rally. Performance-wise, that's usually up like 1 to 2%. So we could still get higher highs by the end of the year, which if that's the case, that's fine. I am still taking some hedges and stabs at hedges with SPY and the QQQ. So in the pulver section, I'm going to add this in right now. I put in a trade on QQQ. And we don't necessarily have a huge bar count because we did hit the 200 moving average during that August 5th bottom. So that July top, August bottom. But the NASDAQ is the one index that is now like the front runner of performers because the S&P hasn't made a new high since, this almost is going on 2 weeks now. So we haven't made a high since December 6th. So that is 10 calendar days ago. The NASDAQ continues to make 1, 2, 3 3 all-time highs the last 4 trading days. And I would say 1, 2, 3, 4 out of the last 6. So 4 out of the last 6 days on the NASDAQ, we've made new all-time highs. We are getting a bit stretched away from even the more aggressive like 21 moving average. But I'm always looking at the measurement away from the 200. So that's a little off. Let me go here. We're about a 12% extended move, which again isn't necessarily like, oh my gosh, we need to crash. That's not what I'm saying. But when we came up into this bar count, plus we had this move, we were around 15%. So could I see us going a little bit higher? Yeah, a little bit higher, maybe into this like 15% extension. So if we're 15% above the 200 moving average, like we were back in July, I could see the market pausing there. And, the one thing that price action has to do is tell us. And if price isn't turning over, if price isn't putting in some type of really, obvious like red flag candle where it's like some massive daily or weekly candle to kind of shock price for a moment, then it might not happen. But at some point when this happens, this is when all the hedge prices start to go higher, right? Like right now, it's very cheap to hedge, and I'm okay hedging. So point is, I'm taking a stab at this one. I'm doing a 131 expiration, and I bought a 533. So 533 buy put and a 510 sell put, and I paid 585 debit for that trade. So that's what I'm putting in the pulver alerts. Essentially, it's this. I'm paying 585 for the trade for an upside of $23. Okay. So if I take $23 out of this trade, let's say we go back down to 510, I get $23 credit minus the 585. I get $17.50 per contract if I'm in 100 shares. That's a $1,700 profit for something that cost me less than $6. So that's about what I'm looking at for like the SPY, the QQQ, something that's going to pay, 3 to 1, 2.5 to 1, 4 to 1, 5 to 1. What pays even more is like way out of the money, long puts. But they also are like a waste of money because price has to move very fast, very aggressively. We almost have to have like just like a giant like delta gamma squeeze, and that can happen. But that's like the trade that you put on that you pay 10 cents for a long put and it pays you $1 credit. So you get like a 9x profit, which is awesome, but that's also few and far between because your probability is extremely low. You're talking about maybe like a 1 to 3% chance of that trade paying you. So anyway, that's the trade that I'm in. I'm gonna take a screenshot of that, I'll post that in Pulver Alerts. And it's just a hedge. If you don't feel compelled to hedge portfolio, then don't take the trade. Okay. But as I've said before, this is something that I have to do for managing accounts. It is silly for me to not have some protection in on any type of downturn. So I do. I'm taking profit on BITO so I can take that 14 to 15K and allocate it elsewhere. Where to? I'm probably going to wait. IBIT is pushing to some fresh highs. I've got some good profits running on both. So BITO right now is up, almost 30 grand year to date. I've got open positions around $5,000. That's all with naked puts or cash secured puts because I was going to take on more shares, but now I don't have to. And those puts I've got some shares of it. I also have, I closed out all these trades this morning. So my 23s, 27 calls, my 14 calls. I have the 2016 and 15 all cash secured puts that are looking to close out for some profit over the next couple of weeks and going into, end of December and monthly expiration in January for some profit. So that'll be a nice little chunk for another like $4,800. IBIT doing pretty well. This is up almost 50 grand. And, is it a spot that I want to take some profit? Probably, right? Some cash secured. What are these? Credit spreads 52 by 51. Those are looking pretty good. 52 by 51. I mean, I've got credit spreads out to next year. I've got some shares. I've got a lot of profit on IBIT. And this is my symmetry level. Now, I've got this one measured out. So if Bitcoin hits 100K, measure moves 107, right? Are we close to that? Take a look at my chart here. So Bitcoin, if we hit 107, okay, here's my IBIT. I just did the percentages and we're pretty close. I mean, I could see us hitting like 60, 61 and change. On IBIT, we hit that 107 to 110 area on Bitcoin and pull back. I could see IBIT pulling back as well, right? So anyway, I like to trade on Bitcoin. I'm going to take some profit on BITO because that was a call option. I'm trading a little bit more kind of traditional options with IBIT. I have some shares, I have some credit spreads, and I'm just using them for income trades. But if we get a pullback, that's fine. I said on Bitcoin, if we get a pullback towards 90 to 80K, I'm looking to add some more exposure to that. I also think that, just doing some reading this weekend, I wouldn't be surprised if coming into the new year that it's kind of, it's an aggressive agenda for the U.S. government, or at least, and nobody knows that this is going to happen. So let's talk about, the probability of Trump can say that we want to have this, we want to lead AI and we want to lead crypto and we want to be blah, blah, blah. The guy speaks in hyperboles, right? I mean, everything is like the greatest and biggest and blah, 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 best, whatever. So he can say whatever he wants, but can he actually make it happen? Let me read what would be required if we had to get a strategic reserve in Bitcoin. Here's what has to happen. Okay. It would involve navigating legal, economic, and political challenges. So, right there, just that alone in the US government, is that going to be an easy task? No. So, legal justification. We have to go back and you're going to have to take into effect, okay, we've got the Gold Reserve Act that happened back in 1934. You'd have to be declaring Bitcoin as a strategic asset critical to the national interest. This would also be something that's directing the Fed or the Treasury to establish and manage a reserve. I mean, there's a lot of bureaucracy going on to even consider that. So saying it is one thing, doing it is another. Okay. Establishing a custodian, acquisition of Bitcoin, regulatory framework, strategic goals, and on and on and on. Like it would not be an easy thing just to do it, right? To say it is one thing, but to do it's another. But my point is this: if we want to celebrate, crypto, or look at it like, okay, now we can say, okay, stock market's at all-time highs and Bitcoin's at all-time highs. Look at how great everything is. I almost think like there's kind of two stock markets now. You've got the spot price in Bitcoin, and you have the spot price in your NASDAQ and your S&P, right? So by those three benchmarks, if you will, it's giving everyday investors a chance to look and see, if I'm invested, are my investments doing well? Because if Bitcoin's higher, great. If the S&P's higher, great. If the NASDAQ is higher, great. Those three are now, to me, the new benchmarks. Okay. Now we're sitting in areas where sentiment-wise, everyone is pretty darn bullish. Goldman Sachs released this. I've got a screenshot of this. I'm going to try to. I'm going to do a live session today at 3 p.m. Eastern time on my YouTube channel, and I'm going to share some of these images. But let me see. One of these was kind of nuts. It was from a podcast that I like. Here it is. So Goldman released a positioning and sentiment survey and just showed where things are at. So right now it's basically a risk on, risk off sentiment survey, and this goes back to 2007 to present. So we're creeping up on like 20 years of sentiment here. And right now we are sitting at some pretty high levels where virtually 6 out of 15 metrics are all pegged at 100%. Like the 100th percentile is as bullish as you can get. And we have risky bond flows at the 100th percentile, U.S. equity CFTC futures positions at the 100th percentile, global equity flow at the 100th percentile, global equity flows 100th percentile, bull versus bears 100. Actually, bull versus bears around the 90th percentile. Safe bonds and safe haven bonds like 0 to 10%, 0 to 10th percentile. So basically, nobody wants safe haven. Everybody wants risk. And if the boat is leaning towards one side, usually that means it's getting a little top heavy, right? And so again, it's not changing until price changes it. And right now, price isn't changing anything. So the SPY hasn't, it hasn't toppled over yet. The Nasdaq's still making all-time highs, but the difference in performance between, market cap weighted versus equal weighted, night and day. Market cap weighted is way up here near the highs. That would be your SPY, right? So lingering about these all-time highs. Equal weighted has had one of the worst stretches ever. Like over like a 20 or 30 year period, we've never seen 10 consecutive days in a row. And I know somebody made a joke about that, like, oh my gosh, I'm glad I survived that historical sell-off. I mean, it sold off 3%, but it was 10 consecutive days, which is very uncommon. I still have some positions in RSP. I dollar cost average into this one around the 177.20 mark. Take a look at the QQQE also. Look at the Qs. 4 out of the last 6 trading days, all-time highs, equal weighted NASDAQ, not even close, right? So we are led by Mag 7 flows right now. And is that going to take us to the promised land? Sure. Until it doesn't, So am I short Mag 7? Of course not. That'd be crazy. I'm trying to think what oh my gosh. Are you kidding me? There's a 5x long Mag 7. That is in, I don't know if that's, I don't know what country that is. That's crazy. So there's a Mag 7 single leverage. That's QQQD. You have a double leverage QQQU. Again, I wouldn't touch that with your money. All right, here we go. YMAG. Maybe that was one I was looking at this weekend. I mean, look at this. Are you short this one? This has to be short. This has to be a short one. So if you're long this, you're short the Mag 7. I'm assuming that's what it is. So let me go YMAG. Let's see what this looks like. No, this one isn't it. Hang on a second. There is a ticker for it. Let's see if I can find it. MAGS, that's what it is. MAGS. There it is. So there's your Mag 7. Now again, it's like we have ETFs for everything, and that makes it pretty easy to invest. But anyway, here's another just this goes, you could find 100 stocks easily that look just like this. They're just getting stretched away from the 200 moving average, and it's the percentages away. It's not so much the bar count. In this example, it's not really the bar count because that August 5th bottom did find the 200 moving average, but it's the percent that I'm getting a little bit concerned with. That percent was around 24%, and we found the 200 moving average. Now our percentage is around 21.5, 21.6. So it's getting a little high. I would think, and again, I'll make a little projection here. I would think that the upside right now in the market is, I'll say this, we will probably see less than 10% upside before we see 5 to 10% downside. Now, I could completely eat those words, and I'll be the first one to take accountability for saying something like this, but I don't think we're going to get double-digit more gains before we see some type of hiccup in the market. 3%, 5%, 7%. Give me the grace to say that if we get a 5 to 10% downside, I can check that box. But if we don't see double-digit upside, I would say that we're looking at a melt up in single digits, maybe a 1 to 3% melt up through the holidays, melt up from Christmas, New Year's into the first part of January before reality sets in. But it could be as simple as this: a forced rebalancing of portfolios, a reallocation of profits and those that have been, taking their momentum stocks and performing really well, and then reweighting the portfolio back to a, 10% Mag 7 and 10% whatever, doesn't matter. Whatever it is, like whatever's running hot this year, being rebalanced is going to force profit taking, and that could be enough to at least disrupt the other flows we've seen. But I'm just going to say I would be doubtful that we see 10% more upside on the SPY before we see like a 3, 5, 7% or even a 10% downside. Okay, so if I'll do it. I'll mark it right now and just make a note. We'll have some fun talking about this. But right now we're at 606. Okay, so what's 10% higher? It's going to be way up there, right? 10% higher gets us up to around 667. 667, 10% gain from December 16. So let me make a note. Horizontal ray, 667. Right in that area. So I'll drag this up here, and it's out of the way and nobody's paying attention to it. But I doubt we're getting there before we have some type of pullback into the moving averages. So a 50 EMA, 100 EMA, something in that ballpark to at least get some buyers interested. And how does it happen? I have no idea. Right? But could the market find a way to hit all-time highs by the end of the year? Sure. Fed doesn't say anything to disrupt the market. Fed, I mean, they can say whatever they want. They can keep their mouth shut and say nothing about inflation, and it gives the market nothing to the Q&A for Jerome Powell, and he could ignore everything. He could go and push like a play button on a tape recorder and give nobody anything. But the Fed's going to cut. It's 95, 96% priced in. Probability is really high. We still have PCE on Friday. Obviously, I'm curious what that is, but we had muted reaction from CPI, right? CPI was higher, but the market was already at a low, and it ripped up like $7 or $8 on the SPY that next day. PPI was another warming up inflation, going lower. But the argument is like, well, based on CPI and PPI, what's actually extracted for that to make the core PCE is not as really bad as everyone thinks. Well, if our core PCE number is at 2.8 and it comes in 2.9, that's still freaking higher. So inflation's going the wrong direction. It's pretty simple to see. So a cut going into the end of the year looks like we're going to have a pause or have some type of reality in 2025. The market's already adjusted this too. The market was expecting, another 100 basis points in cuts for 2025. I think the market's going to get lucky to see maybe 25 to 50 basis points in cuts for 2025. And the way it's lining up in the Fed Watch tool would be a potential March and July would be the two cuts. So if we make a cut here, so we cut December, pause, cut in March, pause, cut in July, and then we see what that gets us. So if we can get through the first half of the year kind of unscathed, I would think the second half of the year is going to be a bit more difficult and challenging, because then the cuts are done, And if something breaks, I mean, sure, the Fed can cut more, and that's always in their toolkit. Like, oh my gosh, we need to fix something. We need to put a backstop in. This has been the one time that I can remember in my career that the Fed hasn't had to break something in order to enact their policy. They've been really lucky, and inflation hasn't broke the market, hasn't broken the U.S. economy. We're certainly getting this bifurcated market where it feels like Main Street is still feeling the higher highs in inflation, and this just persistence in inflation, and then Wall Street's just celebrating all-time highs like nothing could go wrong. So if Main Street feels more of it, there's either layoffs. So one thing you want to watch for is, let me see here, residential construction job numbers. If I can get a data point here, I'm going to try to find this I don't know if the Fed has this on their website, but residential construction job numbers, if they start to go down, that's usually another undefeated recession indicator, and they have topped out. They are starting to decrease. So residential construction job numbers are trending lower over the last three months. Does it get worse? I don't know, but something else is on my radar. All right, that's enough of the outlook. Am I talking out of my butt here? Does this make sense? I think we're going to struggle to go double digits the upside before we see a deeper correction. I would say, like I said, give me like a 5 to 10% downside correction, and I would say that would check the box to say that my projection was right. We'd see some type of correction that's meaningful first before we get any type of ups. And look, if we get a correction first, I'm going to be the first one lined up to say, okay, I'm ready to buy more. And then I'll be targeting something like that as an upside target. But if we just keep going and going and going and going, I don't think we get here before we have some type of hiccup. Okay, so just my thoughts. All right, let's go top down here. So on the day, S&P's up 0.43%, NASDAQ up nearly 1%. The Qs continue to outperform. We have some some interesting add-ins for next year. MicroStrategy's getting added into the QQQ. I would say most people in this room, talk gold, talk Bitcoin, understand where it's going. They've seen the price appreciate like crazy, have some type of appreciation or investment in it. This is going to be interesting to see in 2025, even if you never want Bitcoin, right? If you're Peter Schiff and you never want Bitcoin, but Peter Schiff has investments in the QQQ, you are going to be in Bitcoin, because MicroStrategy getting added in is essentially like having allocation to Bitcoin. So we'll see, but it just makes things interesting. All I said last week when I read that was this is going to make the Qs more volatile. If we see a 40, 50, 60% correction of Bitcoin, which, usually traders have been experiencing 60 to 80% pullbacks in Bitcoin, we'll see what happens. But I would say your new benchmarks going into 2025 is going to be the price of the S&P, the price of the NASDAQ, the price of Bitcoin. That becomes like these really interesting benchmarks to say, how's my portfolio doing based on these three things? And also, that could be a really easy way. If you want to throw in gold, that's a pretty good portfolio if you think about it. If you did 25% SPY, Qs, GLD, and IBIT, I mean, it's an aggressive portfolio because you're fully invested, but you can trade options in all of those. You could protect your portfolio with option trades. I mean, as far as simplicity goes, that's a pretty powerful combo there. So I don't know, kicking that around for some simplicity moving forward. All right, Russell's been underperforming. We're still up on the day, 0.82%. The Dow's come back briefly, but Dow's pulling back into some decent EMA levels. IWM has pulled back towards the 50. This is another one that I'm still pseudo interested in. I don't think I'm good at the 50, but if we came back down to the 100, I'd probably start looking maybe another upside push to see if the Russell can get up there. The problem with the Russell 2000 is that most of these stocks are unprofitable. So I probably won't necessarily trade the IWM, but I'd probably trade something along the lines like this one just doesn't want to pull back. This is the small cap growth. So the top 200 growth in Russell is just freaking killing it right now. I want to pull back on this one, obviously. And then IWX, this is performing a lot like RSP. We just have consistent down days. How many candles is that in a row? Obviously, it looks pretty nasty. We have 10 trading days in a row to the downside on the top 200 value. This whole notion of value versus growth, I mean, value continues to underperform. And I know some, macro investors like to have a value allocation, but it just feels incredibly frustrating to allocate to value and just see it do nothing. The best thing you might get out of value would be you're not going down much further and you're going to somehow have some dividends. That's about the only thing I could see. If value continues to underperform or be flat, you're just going to throw money at something that's doing nothing. You might throw money at something that doesn't go down, right? But it may not go up. So the idea that, growth goes down and value goes up, that might not be the case. It means that if growth goes down, value goes down less, right? So I don't really buy into the idea that we got to be in value. Now, I don't mind having some like energy exposure. I think energy is also a good non-correlated asset to have in the portfolio. If we see, the whole market sideways or stalling, energy is also something that performs pretty well. Industrials, materials could also step up their game. VIX up a little bit today, 2.5%. SPXY took some profit on that last week. The dollar index, keep watching these levels we've been mentioning, right? This high, this low, range bound in the dollar. I don't think the dollar is going to stop going up. So there's only one spot that I would say it's either we form a top in this yellow box, okay, or we form a top up here. So here's just an outlook. We have a low to high on the dollar. I could see this being range bound, but look at this on a weekly time frame. Is there anything about this wave right here that looks like we have to go down? Not really. If this is a wave 1 right here, and this is a pullback, this wave 3 could be all the way up back towards the 2022 highs. You know, so I'm just cautious. Like, I don't know what this looks like with the dollar. If it's hurting multinationals, if it's hurting growth overall with the dollar getting too strong, the milkshake theory, all that stuff happens over and over again. But my point is, if the dollar breaks above this level, which is around 109.50 or so, if we clear that hurdle, there's nothing to stop this thing until the 114 handle. So this will make Forex trading very disruptive. If we see, the Eurozone versus the dollar, euro dollar hitting like 95 cents again, if the pound goes back down into the 120 handle or lower, if Aussie and Aussie dollar, New Zealand dollar head lower to fresh like multi-year lows. If the dollar CAD, which I'm long dollar CAD right now, that trade's actually doing pretty well. Dollar CAD is up to 142 and change. I've been filled on a couple of these positions. My position's been, I threw another 5,000 units at this. So my stacked orders are doing pretty well. I still have stacked orders at 43. I'm trying to get to 44 and change. So I'm just going to build this whole position up. Okay. So dollar index on the daily time frame. I'm just watching this area closely. This 108 high has been hit. This level low is around 105.50. 105.50 is my line in the sand. If the market can break below 105.50, then sure, maybe this is a range and this wants to come back down to range lows, and I would take some shorts on the dollar that way. Okay. But based on this structure right here, there's a lot of support. And if all this market does is just range here and builds and accumulates, I could see the dollar going higher. Like, what alternative do we have right now? What other currencies look good? I mean, the U.S. market is leading everything. Global flows going to the U.S. The dollar's been one of the strongest currencies the last several months. It's ever since that trap we had in September, it's been all dollar strength. Nobody knows what China's going to do, so the Aussie, New Zealand have been struggling. Eurozone, I mean, we're talking about, lots of countries in the Eurozone are struggling. France is struggling. Germany's struggling. I mean, you could have a Eurozone recession that can't be good, right? Eurozone's cutting rates. Bank of England is Thursday with rate decisions. They're not supposed to cut. They're supposed to pause at 4.75. But UK is kind of on its own little island since Brexit, So just saying, I don't really know what would be a better looking currency than the dollar. Now, staying range bound is totally kind of appreciated as a Forex trader because it means there's levels of supply and demand that we can mess around with. But a bigger move to the upside, I would not want to be fading the dollar if this thing's going higher. I wouldn't even want to fade it at this level. I would say I would be interested in a topping pattern, but I don't know. It's a hard one. And honestly, like, I'd rather trade stocks and options than trying to fight, a potential like fundamental and momentum based trend on currency pairs that all of a sudden they're missing pivots. There's no retracement. Everything you're looking for balance and equilibrium isn't there. And we start disrupting like major, decade long highs and lows, or 20-year highs and lows, or all-time highs and lows. That's a really, really challenging Forex environment. So just be open-minded, don't be stuck. Don't be stubborn because the market might do some stupid stuff. Okay. Oil. We still keep bouncing off this like $67 support. We're not necessarily cracking like $71, $72. This is another sign of inflation. If oil gets to $75, inflation numbers are just going to start reading higher. There's no denying that. But if we stay really, really stuck and really, really stuck, we're just going to have to make a decision. So I don't know what oil wants to do. I think it's vulnerable to the downside, but you have a lot of forces. I mean, OPEC can push back hard, right? But if OPEC and Saudi Arabia are coming to a disagreement where OPEC wants, less oil and Saudi Arabia wants more, US wants more, US is playing the inflation game by keeping, high amounts of supply in the market. And I don't know, it's weird to see that Saudi Arabia and the US could be on the same page. And I'm not sure who's more powerful. If Saudi Arabia plus the U.S. are on the same side and then you fight against OPEC, who wins? I don't know. So anything I'm doing in oil is to find risk. But it's interesting, like, okay, oil hasn't done anything, but look at dollar CAD. Still going higher. Had a strong enough dollar and a weak enough CAD that it's going higher. Nat gas, I'm not doing anything with right now. Gold, same story. I still want to see some pullbacks. I like the 25 to 2400 zone. We may or may not see it. I don't know. This little rejection we saw last week, it just to me means more chop. But if we get some gold flows, one thing that is happening in the background is all these central banks that are bidding on gold. It took a break. You know, it's been now at least a couple of months since we put in that top. This was around the election, right? That thing pivoted right around the election. You know, China's been a big spot buyer of gold. If we see, gold price oscillating, they can still load up on more and then see this thing rip to higher highs. I think gold is going to maintain bid at some point. So whether it's, now it just gets bid up and we break these highs at 2,800 and go to 3,000, or if we have this A, B, C, D pullback, we come into this 25, 2,400 zone, I'm going to buy some more gold in there. Silver, still one of my favorite technical trades on the metal side. I'm just trying to take silver up to $35, $36. Bitcoin, like I said, we're creeping up to symmetry. This isn't going to be perfect, but don't be surprised, like I said, within like 107 to maybe 110. If I'm going to give myself a little bit more flexibility, I'd say 115. But if we hit that like 110 to 115 zone, I'm expecting some type of pullback. Okay. And it doesn't have to be like, oh my gosh, a crash market. It's like, no, it just has to come back in and find where the buyers are sitting. So if we stretch up to symmetry and we start to see some, it'd be this, like, structure has to break. Going higher, higher, higher doesn't mean I want to just force a short trade. It means draw a trend line out here and price does its thing, pauses, maybe puts in a little bit of a topping candle and then doesn't get higher. And then when it breaks this trend line, then we start to pull back a little bit. I'm more interested in that. Like, I want to buy some, give me some moving average pullback, give me some dynamic support, find me some structure and balance, and I'll buy some more Bitcoin. If it keeps going higher, I still have exposure. I'll enjoy the melt up like everybody else, but I don't know, I'd like to buy it, but I want to get a pullback. Okay. So spot price, Bitcoin, I'm in BITO. I still have some shares. More than likely on BITO, if we get back to this high, okay, if we get to that high on BITO, I'm taking profit on my shares, and I'll take that profit again and park that into IBIT and FBTC, just because it's a better correlator to me than Bitcoin. The only thing that BITO has for it is I could trade options on this one early, so I did, and I made some good profit on that. Also, this one has a pretty crazy dividend, which is also why the price sucks. Like, this doesn't look like Bitcoin because they have a 50% dividend, which is insane. Coinbase MicroStrategy, MicroStrategy is up. I thought about actually throwing in $1,000, but we gap. I had a chart last night go off at 105 on Bitcoin. I'm like, well, there goes my MicroStrategy, and so we're already up, 4% on the day. I don't know. I'm gonna wait. I could be wrong. I could wait for a pullback. I might not ever get it. Who cares? I'll trade my income trades. I looked at somebody this weekend that was just talking about, oh, just make like $1,000 a week on basically a wheel strategy with MicroStrategy. Sure, but you're going to take at least $40,000 and put it on the line every single week. So if you're comfortable with that type of risk, then take the big swing. But I'm not. So I'll wait. I was interested in owning MicroStrategy in the 200s. I could allocate the 20K cash. Right now, allocating 40K, that's a big jump. So I'm going to say no to like heavy amounts of ownership. I'll just take my income plays. Coinbase still looking fine. Ethereum, I like Ethereum. EETH is the ETF that I play. I have some ownership of EETH. I also have some credit spreads and debit spreads on this one. This is another ETF, ETHA. There's not a lot of data on this one like there is on EETH, but keep an eye on it. Copper might be building a base in here. If we have some, lows, let's say around $4, we're making lower highs right now. Copper might be building into some type of support, and I'd be looking for some type of like bullish pattern to emerge and then maybe resume an uptrend or a channel high. I don't know. There's no reason to rush into it. I think if we build a low on copper, it's in the low fours. Okay. Japanese yen. This will be a trade for 2025. If the Japanese yen comes down to this level, this is 6J, which is the Japanese yen futures. I'm going long Japanese yen. I will try to get some futures contracts out as far as I can. Probably do debit spreads only. I don't want the risk of assignment. But this is another thing. Look, everybody shrugged this one off when we had that August 5th bottom. This could be another potential disruptor to the great story of the U.S. stock market and everything going up. Somehow, the Japanese yen with all the leverage, all the carry. If there's another component to this carry trade unraveling, just watching the 6J. So Japanese yen futures will be on the radar for 2025. I got the chart alarm set near those lows again. I know some like pretty smart investors, good at what they do. Obviously, they're trading bigger picture here, but they're already long the Japanese yen. They're eating it right now, and they're getting stuffed on carry trades or negative swap, which is not fun. It probably feels a little bit like Michael Burry felt in The Big Short. I know it's Christian Bale, but you watch the movie, it's like the sitting on a trade for 1 or 2 years feels like garbage, especially when you're just getting gouged by the market every single day. So, but eventually, if it does pay off, it could be very asymmetric. So that's always a good trade to go after if you got the patience for it. EWJ, that's one of my positions I'm trading on the Nikkei. Nikkei has done nothing since that July to August top to bottom. I'm trying to get some. I don't know. I think the Japanese yen could be in a good position to actually see the Nikkei go higher. It only took 35 years to do it. 1989 to 2024. Just a 34-year drawdown, no big deal. Okay. ARGT, this is Argentina. Look at this thing rip into the upside today. Another one that there's so many stocks that look just like this. I can't buy these highs. I won't buy these highs. I need a pullback. So I'll wait. In fact, this weekend, I nerded out and actually built an alert system where if I've got a 2150, 100, 150, a 200 moving average, 144 actually, that I'll get a chart alarm. So, and I've got them on every stock. So everything in the S&P 500, everything in the NASDAQ. And so as I go into 2025, I'll pick and choose, which ones I want to obviously allocate to. But I just want a bunch of alerts to say, hey, I've got some prices pulling back to levels I think are interesting. This is Brazil. That was getting beat up a little bit on the commodity side. Mag 7, Apple just off the highs. Amazon just off the highs. Actually, we poked highs today on Amazon, but faded. Google continues just to shred on the notion. I'm assuming this is on the notion of quantum computing. Meta pausing at the highs. Microsoft doing okay. I need this to stay above 435. This one actually expires this week. I think Microsoft's going to be fine. Let me see what my profit is right now. Microsoft right here. The 430 by 435. It's up $210. I think my max profit on this one, let me double check what I paid. 265. My max profit's 235. I think I'm just going to take profit. Let me see what I can take profit on. So 475. So I can get an extra 25 cents this week if I just do nothing. Okay. Now, I'm not saying that the market's going to crash. I'm not saying that at all. But in the event that it does, I'm gonna have to take this to the final hour on Friday, and to make sure that Microsoft doesn't drop $10. Like Microsoft can absolutely drop $10 if something fishy happens this week. So come on, let me try to get 475. All right, that's gonna pen. I'm gonna cancel that. I'm gonna keep an eye on this one. So this trade's in the Pulver alerts. It's looking good. It's outside the expected move. I might not have to do anything to manage it, but if I go from today into tomorrow, right before the Fed, I'm curious what the price is. And again, I know a lot of this is going to be like if you're in the options market, there's probably a lot of volatility in IV calculations going on based on the Fed. We might see some really like sticky option chains if you're looking for time decay, especially. And this is a bull call spread, so it looks good, but I don't know. I mean, I'll see. I might if I don't get a chance to manage it, I'd say this 475 or better. I'm going to manage that profit because that would be most of my protected gains. So 4.75 by 5. I mean, I'm getting 95% of my max profit if I protected at 475. So I think, let me take a look at this one again. 1, 2, close. I mean, can I get 480 for this? It didn't fill, but I'll try. Can I get 475 for it? I'm going to let that marinate for the day. See if I can close this one out for 475. So the 430 by 435, those are all fine. So this one for 475. Close. All right, I'm going to put a pending order there to close out my Microsoft at 475. There we go. So 430 to 435, close 475. There it is. Okay, so this is just a pending order. It may not fill, but I would assume that if it's not filling right now, it'll probably fill after Wednesday. As long as we're above 435 by Wednesday, then this one's probably going to fill. So hopefully it feels like today or tomorrow, and have to worry about the potential risk of the Fed. And I'll take 95% of the profit any day, especially when my profit is capped to the upside. All right, putting in these orders real quick. All right, Microsoft 430, 435, close 475, pending. And that one also has ratio spreads 350 by 345 and the 340 by 330. Those are naked puts. So anyway, looking good on some income there, but I want to try to get most of that profit out of that 430 by 435 by this week. It closes on Friday regardless. I'm just trying to either get 95% of the profit this week or whatever. I'll just let it expire for full credit by Friday. So that's my line in the sand for Microsoft. And Netflix 921. I'd love to buy some Netflix on a pullback. I just don't know if we're going to get one. This is ripped up enough. You know, we stretched a long ways away from that 200 moving average. So NVIDIA, the reason I've called the top on NVIDIA at that 155 mark is for the same reason. We've got a long bar count plus a distance away. Netflix is also a pretty decent stretch. So we've stretched away by about 26%. That's a lot. We also have a bar count back here in October 2023, which should be in the high twos right now. 290 bars. So where am I interested in Netflix? Well, if we pull back to the 21 or the 50, probably the 50 period to start, and then target like $1,000. I think we can get to $1,000. I do wonder on Netflix though, if we get to 1,000, do we see a stock split? It's possible. I'm hoping we get a pullback before we run into 1,000. If it just keeps going up to 1,000, honestly, Microsoft just filled for 475. Good. All right. So I'll find that trade. That's going to get updated in the Pulver alerts. So BITO, Microsoft, and yep, those are all filling for profit. That's good. That's one less risk for this week. Closing out for 475. We did the 14 call, $5 debit for 13 credit, and it was the 430 by 435, 265, closing out for 475. Writing it down. All right, Netflix, a pullback would be great. Hopefully we get one. NVIDIA, fading lower. I actually might have some assignment coming on NVIDIA. I have a ratio spread here, a 132 by 130. If I do take the assignment, I'll take 100 shares with a break even of 125. I will flip that in a heartbeat for hopefully, I would say $4 to $5 plus in credit. Let me see what that's looking like right now. NVIDIA. Where are we at? So my 138 by 137, that's a credit spread out to December 27th. There's still some time in this one. I haven't had any assignment. I don't have any shares right now in all of my trades. I also have a 75 by 55. Those are ratio spreads. I sold those during the August sell-off. But this 132 by 130 this Friday, I mean, we're not below the 130, so there's no risk of assignment. But if we get below 130, I would take the shares. I would very quickly probably just throw out like a 2-week like a 2-week covered call, try to get like $3, $4, $5 and just repair it and turn what would be, like this losing credit spread for, 50 cents or 45 cents. I collected, what is that, 48 cents? So I need to make up 48 cents, and I could do that by turning a profit of, $400 to $500. That's easy. So anyway, if I take some assignment on Nvidia, that's totally fine. But the goal is, if Nvidia is coming back, here's where I'm interested in buying: the 144, the 200 moving average. So if I take some assignment, I'm trying to lower my cost basis as quickly as I can down to like the 115 to 110 zone, and see if we'll get a bounce. And look, if I'm doing repair trades in JD, Alibaba, Baidu, I'm pretty confident I can do that in Nvidia too. I think Nvidia's hated a little bit less than those China stocks. Okay, Tesla, whatever, dude. Tesla is insane. We ripped through all-time highs. I don't know. I do wonder how this like Department of Government efficiency translates into Tesla trading. I know, unfortunately, like investors don't treat this stock like it's just Tesla. They treat it like it's everything that Elon Musk touches, for better, for worse. So here we are, stretched away by 45% from the 200 moving average. I don't know how many times in history we've ever had that much of a stretch away move. But right there is 39% when this market basically topped out in late 2021. Here's another one where we sharply pulled back. We were about 45. I mean, it's right there. It is right there. So I'm just going to wait, and I might be old fashioned by waiting, but I think I'm not chasing this stupid thing. Like, that is a ridiculous stock to be buying now. So I won't. I do have some levels in. I want to trade some options on it, but you got to give me a pullback. Okay, Berkshire Hathaway. I do have a chart alarm set at this low. I'm going to move this thing up to 445. 445. And I'd be interested in some Berkshire Hathaway. Again, nothing more than the 200 moving average. If we pull back to it between the 144 and the 200, I probably start establishing some longs on Berkshire. Even if it goes like this, right? This could be a good looking pattern here. Slightly higher highs, slightly lower lows. Get some exposure down at these levels, broadening pattern, get back to the midpoint or get back to the highs. There's some good upside there. So I don't mind that at all. I think that's a good trade. But I'll wait and see if we get that level hit. Bonds versus yields. Okay, this 10-year yield continues to make me nervous. We saw with the CPI numbers and PPI numbers last week, plus we have PC this week. Watch this level. If this thing breaks above 4.5, the Fed is probably leading us into a reality check at some point, and it's not going to be good. Okay, 5%. We already saw the crippling of 5% on the U.S. 10-year yield. It's potentially a repeat. So I'm hoping that's not the case. I'm hoping with 100 basis points of cuts by the Fed that the market doesn't just run away. And to be determined. I don't know. But this is a huge concern going into 2025, in addition to the 10-year and the 3-month, which right now is officially disinverted. So, all right, we officially have it. Disinverted 10 and 3, 10-year 3-month. As I put here, borrowed time. So this, for what, 40 years, has been an undefeated recession indicator. Goes back to 1982. That's 42 years ago. Every time this thing has had a disinversion, we've had a recession, usually within 12 months. So at some point, the deepest and longest and most sustained inverted yield curve, and we're coming back out of it, I don't know how that's a good sign. I could be wrong. For the first time in 40 years, maybe I'm wrong. But I don't think this is a good thing. So we're officially disinverted on the 10 and the 2-year and the 10 and the 3-month. Godspeed, everybody. We'll see what happens. Okay, China stocks, probably still more of the same, just waiting. There will be a bigger stimulus announcement or a bigger official plan announcement in March of 2025. So we'll see what happens on China. I'm still, I'm in it because everyone hates it, and I'm in it with a lot of option trades. So, it's managed risk, but still It's frustrating to see that big rip in September. HSI is just kind of hanging out. We had that huge squeeze for year to date. I mean, this is kind of nuts, but I want to say like year to date. Where did we start? I got to go in here for the weekly time frame. The 8th, the 2nd. Okay, so we started here. Okay. Somebody had said, like, I think China is actually outperforming the S&P, and they were at one point. They were up 35% before that September top, but now they're back up to around 15.5%. So, maybe it's outperforming the Dow, but it's not performing the S&P and the Nasdaq right now. So we'll see. You can still look at the structure here. There's still a pretty decent channel. So even if this is trying to find a way to build, like a little reversal pattern, and we get another nudge higher, I don't know. I'm looking at this as a potential double bottom, though. Double bottom, back to the highs. If we get a bullish pattern to somehow break above this like 22,000 mark, I mean, China's got a lot of upside potential. I just don't know if anybody cares. Everyone just wants to be in U.S. stocks right now. So anyway, all right. Any other currencies you want me to take a look at? I pretty much just did top-down stocks. Currency-wise, it's really all about the dollar. I'd say that's the one basket I'm focused on the most. I don't really have a lot of trades. I'll give you my full positions in currencies right now. So Aussie CAD, oops. And I'm not really planning on doing a bunch of active trading in currencies. So the positions that I have in are established. I'm going to keep them, maintain them. Aussie CAD, I'm long. Aussie Swiss, I'm long. Aussie New Zealand, I took a buy trade on that last week, I believe. I took a buy trade on the 200 moving average. Aussie dollar, I'm long. CAD Swiss, I'm long. No CAD yen, no Swiss yen. Euro Aussie, no trade. Euro CAD, no trade. Euro pound, I'm currently long. Euro New Zealand, Euro yen, no trade. Euro dollar, no trade. Pound Aussie, pound CAD, pound Swiss. Oops, that's another one here. Euro Swiss. Pound Swiss long. Pound dollar, I closed out last week for a small loss. New Zealand CAD, I'm long. New Zealand Swiss, I'm long. Dollar CAD, I'm long. Dollar Swiss, I'm long. Okay, this is my entire currency trade. So my entire portfolio, this is my positioning. A lot of these are not, hey Chris, where's your stop loss? They're just positions. I'm building these. I'm holding these. I believe these are the directions that I'll get right over the next, few months, or maybe the next 3 months, 6 months. Most of these are also offerings of positive swap. So I'm getting paid on the broker every single day, and that's fine. It's not why I take the trade, but it doesn't hurt to have the broker pay every day. So, I mean, of the 28 major currencies, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I think that's right. That's my exposure. What do you think happened with the dollar CAD? Nothing. I mean, the BOC cut last week by 50 basis points. So who cares about the Fed tomorrow on Wednesday? The Fed's cutting down to 4.25. The CAD's already down to 3.25. So it's still positive swap. And the Canadian economy is way worse for wear than the U.S. economy. So I'm still long. And look at the technicals, man. The thing's been a multi-year breakout, and it broke out of a 2-year range. I think it's going up to a measured move at 4,500. You got also like 2016 to 2020 highs at 4,600. So between 4,500, 4,600, I'm long dollar CAD. So if the Fed does anything to disrupt that, it's going to be like an interrupter thing. But I think the trend's already established. I'm taking that thing up to 4,500. Okay. All right. That's it. I'm going to wrap it up there. Thanks for being with me today. We'll see you tomorrow. Thanks. Bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.